Market news now. Global stocks extended a record high and U.S. Treasuries were steady amid growing confidence. Inflation will prove transitory, leaving scope for continued central bank support. When we look at what was happening with the markets, shares in Asia Pacific were mixed, with stocks in Japan little changed as the Nikkei closed marginally lower. Mainland Chinese stocks closed lower as well as the Shanghai Composite fell nearly 0.5%, while the Shenzhen component slipped 0.6%. Over in Hong Kong, the Hang Seng Index advanced 0.3% in its final hour of trading, and of course US futures flat at this particular moment. But to get into actual detail about some of the themes that have played out, lots of news coming out, especially that US inflation number. The week started off fairly boring, but for those who were looking for some kind of catalyst to ignite the market, that U.S. inflation number was one of that particular figures. This is for those investors who were craving for some kind of volatility. CPI jumping 5% year on year from 4.2% in April. Core inflation, which strips out all the volatile items like food and energy, that, according to data saying that it rose 3.8%, and that was its biggest increase since 1998. The report mostly happened to fuel concerns over rising inflationary pressures, making us all wonder whether the Fed might do anything, whether they still believe that inflation is transitory at this particular point. Some analysts saying that it may prompt the central bank to think twice about their transitory mantra, while fueling speculation over taper discussions. But when we look across other U.S. markets, Treasury yields managing to spike up 1.5% yesterday when the news came out. U.S. stocks also opened higher on the back of this, while the dollar, perhaps not having so much of a good day, happened to whipsaw at that particular moment. The other news that has been playing out has to do with the Naspers process share swap. Investors have been talking about it. Some investors have not been quite happy with it, but we're going to get into all of that detail with David Shapiro from SASFin. David, thank you so much for your time this afternoon.
Pleasure. I was going to come on a video link, but it's not working.
Sometimes technology isn't on our side, but I'm wondering if the markets are...
that wheel of death, you know, the wheel of death. It goes round and round and round.
Well, you know, sometimes, I don't know, things just happen. But let's talk about the markets. I mean, how would you characterize the JSE's performance right now?
It's steady. You know, I'm a little disappointed in the way that it's responding. We've had quite a bit of good news. I mean, in every respect, even the the SAA news, things are happening on the electricity side, current account, mining, manufacturing, and even some of the results are starting to point upwards. And yet we've just been plodding along sideways, which might suggest that a lot of the good news is already priced in, and we're just going to go into a kind of mark time period. So it's not, there's nothing wrong with it. We've had a very good run this year. The Rand's done well. So we might just go into a period of indifference as we catch up, as the market catches up with some of the earnings and economic data.
It was a bit of a boring start to the week, and I suppose what investors were looking out for was those U.S. inflation figures. They came out yesterday. What did you make of them?
Well, it's not what I made of them. It's what the market makes of them, which I can't quite understand, because the market's interpreting them as a non-event. In other words, the price reaction that we've seen in U.S. markets has been really brushing them aside. And yet, when you listen to experts and you read a lot of commentary, there's a view that, that this is not transitory, that this is going to be permanent. In other words, that inflation is not going to fall below the Fed's target, which is 2%. So, in other words, we're going to exceed it. So, for the meantime, markets are very positive. The U.S. 10-year bond yield has fallen to 1.43. So, the bond market's not worried about it. The equity market's not worried about it. So I'm going to go along with that. I enjoy strong equity markets for whatever reason, but keep an eye open for what happens next month and the month thereafter and so on. Still going to be a very, very big topic that's going to be discussed.
One thing that is a big topic right now is the Naspers process share exchange, and I see it's still making news. What do you make of this? Last week we had one of the analysts, describing it as a snake trying to eat another snake, but chaotic and messy. How are you understanding this?
Well, I'm just ignoring it. I'm just not doing anything for clients. It's too complicated. And I don't want to explain to clients what it is, because they're going to have to pay capital gains tax if we do the conversion. Also, they're going to say, what's in it for me? So I'm quite happy. And we've got a lot. I've got a lot of exposure to Naspers and to process, but I'm just going along for the ride and saying, look, I'm not going to do anything. So I'm in that camp, and I'm in the camp, just leave it, Naspers. Just leave it. We like 10 cents. Just don't interfere. Don't sell anymore. Don't try to do anything. Don't try to close the gap. Just leave it as it is. Because all that's happening is the lawyers are making lots of money from it.
Before I let you go, key themes that you think will drive markets in the next week or so. What's still lingering around?
Next week is difficult. I still think that, we've over the inflation numbers. So it's going to be, and also we're in a kind of a dull area. I think it's going to be more what happens in the next few months that we're going to have to watch out for. And you mentioned it, it's going to be the U.S. inflation numbers. There's nothing on the geopolitical side. Commodity prices seem to be just plodding along as well, not doing anything. So I think and we're going into the U.S. summer, where everybody decides to go away and spend time on the beach. So as long as we keep on the current trajectory, I'm quite happy in both markets, both ours and in the global markets.
David, thank you so much for your time. That is David Shapiro, who is the Deputy Chairman at SASFIN. Up next, we have Your Money and